Welcome. My name is Rikard from representing Fearnley Securities. I have a great panel here with me today. Some ship owners that has done some fantastic careers and will share some views with us on the commodity shipping markets and the upcoming regulations. We can start on the far end here. Fiori from CEO, Premuda, controlling 28 vessels, Drawbook and tanker market. Premuda has a long history, established in 1907. In my previous career, I covered, remember D'Amico, which you controlled or headed for 22 years. There were some periods that, the company needed almost weekly updates to hold the keep control of the fleet development. Marco bought and sold ships faster than I were able to print new research reports. So I certainly can sign off that you have a strong ability to buy and sell ships and the asset play. Boye, COO in Pangaea Logistics, international shipping group, capitalized at around $300 million. Terminal operations, long-term COAs, ice-class vessels. The company offers unique logistic solutions. And to my left there, John Su, President and CEO of Erasmus Shipinvest Group, international shipping group focusing on Drawbook as well as container feeders and LPG vessels. Operate a diversified fleet of 30 vessels. The key exposure to these companies are Drawbook. Øystein Vågen, which just held the presentation now, was covering the key items at least on Fearnley's view. The market has underperformed market fundamentals. Demand is between 4 and 5%, supply 2.8% with basically marginal congestion in China. But if you're looking at the cyclical comparisons and leading indicators, these 2020-24 can be compared to 2021, 2017, 13 and 10, and on average on those years, rates were up 80% year on year. So we are bullish on 24, but we'll see what these gentlemen have to say. I'll jump into some company-specific questions to start off with, and maybe I'll start with you, Mats, on key priorities for your company. And I read the quarterly report, and you said something like, the company focusing on, continues to maintain a disciplined capital allocation strategy designed to drive long-term value creation for our shareholders. That is too complicated to me, but what does it really mean? What's your key priority for 24?
It's not really controversial, is it? No, but it just reflects that our sort of key priorities doesn't change quarter to quarter. We think long-term than most other public shipping companies. We prefer slow and steady. That's fine with us. And the markets for us actually haven't been that bad this year. The macro outlook on supply and demand looks great, and I think we will for sure be more busy acquisition-wise in the next 12 to 24 months than we've been in the last 2 years, where we felt the prices probably got a little too high. So it's continued growth in the underlying COA business, and then we add ships on top of that.
You added a couple of ships the last 12 months, 3 ships, I guess, and $64 million. Are you still optimistic on ship prices as of today, and would you consider new builds?
I think for us, new builds, it has to be said, has always been something we've done around a project, a contract, and primarily in the ice class space, because there's simply no second-hand market to buy those ships from. So I don't think so, unless a couple of the things that we're working on now will come to fruition, then we will for sure be in the new building space again. But in the short term, we're focused on second-hand acquisition. There's still, we feel, the best value out there in that part of the market. And we're not scared of where the values are. I think again, for the Supramax and Ultramax space, the markets haven't actually been that bad. You know, Capesize takes up a lot of the attention. That's natural, but sort of our underlying business has performed quite well, and I don't think we're sort of scared away by today's prices. Not at all. It's about finding the right ship. That's what the key is, right? So.
And any comments on Swiss Marine buying into the company? We've seen a couple of examples on that on the container side, at least. But you know, Swiss Marine, is that any comments on their buying 5%, I guess, of the company now? It
seems to be the fashion these days, right? Other shipping companies buying into each other. It's interesting. No, I can't comment much other than I think, people look at the values of the stock, and they look at, how do I get reach beyond my own company? How do I, find another company that they think are well run and they see an opportunity, right? We're not too fussed about it, to be honest.
Yeah.
It's it's in some ways it's a stamp of approval.
Okay. John, you have a fleet of Drawbook and containers, LPG. How do you view, a diversified fleet seems to be your strategy. Can you elaborate a bit on that? Is that any clear benefits or disadvantages, diversified fleet versus a pure play fleet, etc.?
Yeah, sure. Thank you for the question, Rikard. Morning, ladies and gentlemen. Actually, as to the question asked by Rikard, I think diversification is somehow that we are doing spontaneously. On the other hand, is also a little bit passively. We are reacting to the market trend. Because at the very beginning of Erasmus Group, when we set up the company, is mainly concentrated on dry bulk, especially with grain as the major commodities that we are carrying by Panamax and Kamsarmax. So, of course, on the other hand, there's always a pro and con for any kind of diversifications, actually. So it's also, as what our group is doing now is on dry, on gas, and container feeder vessels. They are somehow facing different phase of the market cycle, and also commodity demand-wise also quite different. On the other hand, I would like to say that probably the size of the ships that we are involving on all these sectors are relatively going to smaller size instead of mega big size vessels. So it's not only because of the size of project different, of course, but on the other hand, we are also viewing the market challenges, especially given by the different regulations, alternative fuels, a kind of, I think we are at a crossroad that we have never encountered in the past, that today what we are making a decision on different technologies, we are not sure about tomorrow or the day after tomorrow this can be correct or not. So this is something that a kind of diversification for us to manage the risks.
Okay.
Yeah, thank
you. The LPG market has been very strong over the last months. The order book has been building up. What's your expectations on the LPG freight market going forward now?
Well, I think also every sector, as said, is really can be falling completely apart according to the different size of the ship. As Fearnley gave very correct prediction and summary on the VLGC sector, I think is we are probably facing also certain kind of overcapacity situation because such mega vessels are easily built by some strong capacity shipyards out of China, Korea, Japan. And well, what we are doing in particular is relatively smaller size. So the smaller size, as at least we know that there are very, very limited yards building capacities. And also on the gas side, it's quite different from the other segments, is that it's heavily dependent on the gas tanks. So the gas tanks maker, for example, out of Japan, as far as I know, is only 2 makers now. So which means that the building capacity for smaller size of gas carriers can be very limited. So, and this is overall traditionally gas carrier is very much a stabilized sector. Some people would like to say that it's very boring because comparing with large Cape-sized vessels or tanker market, it can be very lack of volatilities. So, well, to my eyes, I think gas, especially the smaller segment of gas carriers, bring very much stable cash flow. So it's also a kind of long-term investment game instead of speculative way.
Okay.
Yeah, thank you.
Just a final one. If we look into the crystal ball for a company like yourself and other ship owners, what one area do you think ship owners will regret they didn't invest in 12 months from now? You know, which sector are you most bullish on?
I think it's always difficult for everyone to find the real crystal ball. But I think I would rather say that probably let's hope that we will not regret that we have done something. On the other hand, as said, apart from the commodity supply demand side, we are seeing that completely mixed signals on different alternative fuels. So we have seen that recently quite a few orders being placed on the dry bulk, on tanker, on all segments that with either ammonia or LNG powered or methanol. So there are certain conventional orders as well. Conventional fuel vessels ordered as well. So, and relatively on a high price level historically. So I think that's sometime I would like to say that maybe doing nothing is better than doing something wrong at the moment. Yeah, thank you.
Thank you, John. Marco?
Yep.
How high can these product tanker rates go this, next 12 months? They've been pretty firm the last 12 months now. How high can they go?
Well, I think probably they're not on the highest. The highest level, I think, was the beginning of this year and end of last year. But, they've been very stable. So I think the big negative thing that we have in general in markets is that we get very quickly used to good markets. So you say, only $30,000 a day because, 6 months ago you were making 35, So, I think you have to be realistic and keep, today the rates than 3 years ago we would have been dreaming about. So, I think you have to keep your feet on the ground. So prices have been going up, rates have been steady. And especially what's been very interesting is that you have a very large number of first quality charter who are extending maturities. So it's not just for us that we see the market going strong, but you see a lot of the big traders, the big oil companies, they're very interested in securing tonnage. Probably because they see that the inventory is going down, modern ships, they're getting fewer and fewer. So you see a lot of people are interested in periods that before you were not seeing the 3 years, the 5 years. I think that's a good indicator in the market. So I think prices in 24 will be strong. And a lot of people say the Russian-Ukrainian war has been a factor in these levels. I was always very convinced that tankers would have been doing well. Probably has been more of a catalyst. The war has been accelerating and enhancing this volatility. But I think we would have faced anyhow a good market because, there was the problem of the ton-mile stretching for changing regulation. There was the problem of less output, less modern ships. So I think all the factors were there. I think these geopolitical factors have only accelerated the rise in the market, but I think the fundamentals were always there. So 24, we still forecasted as a very good year like 23, which has been a very, very good year. Also, if not been the top, but I think we go back in the concept of being satisfied of what's happening.
We saw in the previous presentation the ordering level and order books, both on Drawbook and tankers, are at historically, at least, relatively low levels. Is this time different? Could we see an extended period of time, both on the Drawbook and tankers, with super profits there before, overbuilding the market against, could we see, is this time different, and could we see an extended period of super profits here the next couple of years, Marco?
Look, I'm always very, very suspicious when people say this time is different. It's always the same, This time it's always the same thing, It's never different. What I think, and I think I would appreciate if somebody also here in the room would interact on this. What I think is a little bit different is that you saw in the very strong market 2005, 2006, there was a huge number of greenfield yards coming in the market. This time, very few actually. There's been yards actually being reduced. So there's not been that rush that has been last time on last cycle. This is for me the main difference. So you had a strong market with another principle in shipping, which is important. Every year that goes by, the fleet becomes 1 year older. So you had a lot of fleets were getting 1 year older. There was lack of building for many years. And then there's not been this tremendous push up in new buildings. So I think there's been more of a consolidation with less number of ships delivered, more yards with more. So I think it's all positive factors in general on this. I don't know, but this is just my modest opinion,
A last question to you. Can you share a bit of your thoughts running a public versus a private company? What's the key benefits and maybe challenges, private versus public?
Look, as far as time consumed, I can tell you it's the same, because I was traveling a lot and I'm still traveling a lot. Actually, I've been here and you don't even know where you are at the end of the day. No, I think you have less probably corporate governance. But for sure, when I joined Premuda, the company was in Chapter 11, so we're coming out of it now. We're doing very well. So you have other worries, So one, D'Amico was a well-established company after many years. As you see, we were selling and buying a lot, and then this one is the same thing. We started with 12 ships. We're at 29 now, and so with a lot of work. But I think the amount of work is just the same. I think the key part of both of them is just being surrounded with very competent people. Choose well your staff and your advisors if you need some advisors. But the key issue is choosing always the best, because running things and being a micromanager doesn't work, I think, in general.
Okay, let's touch a bit on. Thank you for that. Let's touch a bit on the Drawbook side, and we can start off with the demand. Iron ore and coal imports to China and India has been significantly stronger this year than previous year. Despite that, we have seen relatively subdued rates. What has gone wrong on the demand side, if anything? Maybe start with you, John.
As to the demand for dry commodities, especially in China, iron ore and coal, I think it's always there's some kind of seasonalities involved. But overall, I think that's the demand, especially on iron ore, maybe not that strong as comparing with year before. Obviously, it's very much associated with the real estate market, overall the economic performance out of China. And what I would like to point out is also actually on the green sector on the other hand, is quite booming in the firm for the last couple of years, including this year as well. So the green demand is very much stable, let's say, also for the long term. For the coal, I would like to say that actually, even though it's a little bit as deemed as a polluted category, but it still remain firm over the past few months. So I think that's more or less on this demand side for dry commodities. But what I think what you ask with Marco about is kind of the supply, especially some yards out of China, as supposedly is used to be bankrupt yards or greenfield. Actually, over the last couple of years, a lot of them have been coming back to the scene, actually. So this is some signal that we have seen. We have never not seen since 2008 so far. So and obviously, For the demand, for the supply side, we have seen most of the shipyards in Japan, China, they are fully up to 2027, even further. This is something we also very, very seldom to say that order book have been filling up for the next 4 years' time. So,
Okay.
yeah, thank you.
Yesterday, we saw a big stimulus package being announced in China. You know, how could this impact the market? It's an open question to you guys. Anyone wants to answer? How will this impact? Could this impact the Drawbook or the markets?
I think it could for sure, right? And I think the story around China is, in my opinion, more of a sort of a dream that never happened, right? You know, we were hoping in the early part of the year for this China reopening story, and it didn't really happen, right? And I think the only negative data point you can point to is the reduction in inefficiencies in the fleet, right? It's nothing else suggests that we would be in this kind of market, because I think the slides, if we had done this half a year ago, the slides would have been the same, right? The same story. So, you know, I think that the one silver lining here is that the inventories are low. So there's for sure more risk to the upside, it would seem. But I mean, it's never a straight line, right? There's always, it never really plays out the way you think when it comes to how this Chinese demand works, I think.
Yeah.
On the tanker side, I think that any kind of recovery in China would absorb, because China has been a big contributor to this market of tankers, because they've been importing a lot of crude, refining it, and then whatever was not consumed domestically, they were exporting it. So there's been a lot of exit of products out of China. So any kind of domestic improvement would reduce the exit of products out of China. But, you know, at the end of the day, they're still a big player, and I think in the global energy market, if you want to talk about that, I think China is important, but just as important is India. I think there are other factors that are more fundamental. I'm sure your analyst, Fearnley, would agree that is the massive dislocation of refining and production between refineries. I think the massive increase of ton mile with new regulations are coming in. So these are really tectonic shifts in the market that I think we've never seen before, like John was saying. You know, I think we're seeing really some factors that never happened, and probably similar to, I don't know, OPA 90 with the double hull. You know, you had to decide something very quickly. So I think that's going to be very, very interesting time, but not necessarily bad times. I think I'm very positive about the future. So, you know.
Thanks for that. If you look at coal as a commodity, it's been you know, record high import levels and very strong demand on the coal side. But despite that, you know, being the most pollutive energy source, what is your long-term view on coal, and how will this impact the market? Will it continue to be you know, in demand the next, you know, 4, 5, 6 years, or will we continue to, or will we see a, you know, decline at some point, at some stage here? What's your view, John?
Yeah, I think the coal part, as mentioned, can be a really little bit tricky item that we talk about. Of course, a couple of years back, we have seen some companies, for their image reason, they even announced that they will never carry coal cargoes for environmental protection purposes. But however, recently we have seen quite a strong spike on the coal transport demand, and personally I still believe that for the next few years' time, coal will never disappear. So especially, as said, sometimes seasonalities for the winter season, so for the North Hemisphere, for sure, the coal cargo will still remain very strong part of the demand.
Yeah.
You know, I wanted to add something on John, expanding it. In my career, probably I'm here one of the oldest, but not of the smartest here in the room. But apart that, I've seen coal dying and resuscitating at least 2 or 3 times. Our coal is dead, let's move out. So that. I've seen oil companies saying, no, more than 15-year-old ships, we're not going to charter any more than 15-year-old ship. And that's also gone out of the window. What is the meaning? That at the end of the day, we need energy. And if we don't have energy at cheap prices, people can have a lot of greenwashing, the best intentions, but then at the end of the day, we need energy. So people will always try to find a mix that's going to give you the highest output at the cheapest cost, and that goes for coal, goes for oil. So I think it's going to be a long transition, but the main driver is going to be that we need the air conditioning, we need the heating, we need all the products that energy is giving us. So, I think we have a lot of good intentions, but then we're brought back to a very harsh reality of the things that we need every day, So, and this, my personal experience, but I don't know.
Mats, a question to you. If we move on the supply side, we're seeing on the commodity shipping at least a relatively low, focusing on Drawbook and tankers, relatively low order book, and yards are filling up now until late 26, 27. You have new regulations coming in that will reduce vessel speeds, canal congestions. Charters require newer vessels when they charter due to corporate governance policies, etc., etc. Could we see a supply crunch here the next couple of years? And what's your view on the new building capacity going forward now?
I think I can echo what the other 2 gentlemen said here, and especially a comment around charters requiring higher standards. I think when you get in the room with them and negotiate, it's a very different story. In terms of, they would love us to do that and say, do this, do that. But when it comes to understanding that has a higher cost, the conversation sort of turns over to a more pragmatic approach. And like what you said, Marco, about older ships and all that still is very much in the picture. You have some very high-profile orders of some dual-fuel ships, but in reality, those are companies that will have 5 or 6 dual-fuel ships out of maybe 500, right? I think it's unsustainable for shipping companies to bear that burden. It will never work. If we don't find a way to work with our customers, essentially pass this extra cost down the line, it cannot work financially, unfortunately. But the extra cost is simply too large now. And I think there will be a time now where it will be sort of contract-based, where you can find the few customers who are willing to do it. And then, we are absolutely prepared to do it as well. But until that point, we are focusing all of our energy on optimizing what we have trading on the water today. There's still 5-10% probably we can gain from doing things better there, and that's what we're focused on.
Marco, do you have any views on the supply side you would like to add? You have been in the market for a couple of years, so seen some ups and downs.
No, I think on the supply side, I think we all agree on that, and I think that. I think that's one of the reasons why I'm kind of bullish. I think, I think you see a lot of people saying, I don't want to buy ships, I don't want to build ships at these levels. But then at the end of the day, I think you move in steps, it's like steps. I think the period of building MRs, new building MRs at 32 million is finished. Probably the next floor is 38. So probably it's today 45 is high, but we're certainly not going back to 35. So, I think we moved into a new paradigm because for many years prices were where they were. Shipbuilding is not the most popular industry for young people to go and work in. People prefer to be in IT or in other jobs. It's a tough job being on a shipyard in winter, building ships. So it does not attract a lot of people. And I think that at the end of the day, I think supply is going to be very limited, very limited. But it's going to be more limited than it's been in the past, And then, then I think there is also a cycle we've seen in our lives. If you think about it, was before Europe building ships, then was the United States, then moved to Japan, then moved to Korea, and then moved to China. So I think today you have to ask yourself, once China is going to lift its economic level and less people will want to go into shipyards, and so is Korea and so is Japan, who's going to be the next China? Frankly speaking, I don't know who's going to be the next China, because I think it's going to be difficult to find a replacement that all these countries have had of cheap labor and skilled labor and cheap labor. I don't see the next country in this cycle who could be.
So India will not, be a shipbuilding nation?
Yeah, they could be, but India is a very educated country. It's a very big country. They have fantastic people in India coming out, especially on the crewing side. I think that they're probably one of the best crews. But then it is a very bureaucratic country, and it's already evolved a lot. So I think it's very difficult to see India becoming the next China in the shipbuilding industry. I think I don't know.
Okay. John, moving on to the regulatory side of things, EU ETS scheme is coming up in addition to other IMO regulation. How are you positioning yourselves towards these new regulations and implementation of these?
Well, we are actually, in particular for our own fleet, certainly we are doing the evaluation of each vessel's emission standards to make sure that we are meeting the decarbonization requirement, any policy issued by European Union and IMO. And again, on the alternative fuel side, we are really stick to the conventional ones, so up to now. And certainly, most of our vessels, fleet vessels, are EEDI, EXI in compliance, and also, we don't feel that there's a serious threat or impact to that part on the regulation front. Actually.
The implementation of the ETS system has not been without criticism. Mats, do you believe that the ETS system could be a part of the solution to decarbonize international shipping?
I think it would have been preferred if it was a global system. I'm sure the IMO wants to get in on collecting funds from ship owners soon, but I don't know how quickly that can be implemented. But I think some sort of carbon tax is the only way forward to sort of drive to be part of, not all of it, but not all of the reason, but part of the reason for driving the change, right? I think the EU ETS system is unlike the EEXI, which when we first heard about that was very scary. And then we trying to get our head around CII, and okay, we find out that's manageable as well. Now the EU ETS has a lot more sort of operational and commercial components to it. But I mean, this is something that we have already bought the first ones because we already have contracts for next year. So we have priced that in. So it can be done. It's for us. It's anytime you have like uncertainty and a little bit of hesitancy in other parts of the market for these type of regulations, that's opportunity for the rest of us. If we find a way to handle this well, and I believe we have, this is another part of where we can service our customers better than a sort of traditional tonnage provider or a company that's not even interested in going into this, right? I think the key will be to make sure that it is enforced, so those that follow the rules and buy the EUAs and hand over the EUAs that the ones that don't do that are not able to continue to trade, right? That would be a big problem, right? But in terms of this mega disruption, I don't think, at least not for us. Our customers appreciate that we have spent the time understanding the way it works, set up the accounts, and can offer that inclusive in our freight offering. So.
A question to the three of you in this relation. Are you considering buying a new ship with an alternative fuel, and if so, which alternative fuel do you think will be the preferred fuel in the future as the world looks now?
I think I've kind of answered the question earlier. I think is that like we're still very much in a wait and see mode.
Yeah.
I think much more than what happens on the ship and the technology there, what determines the decision is the availability of the fuel and the infrastructure to supply that fuel. Whether it's fuel A, B, or C, I think we're pretty agnostic about that. It's about making sure that if you spend the money to buy the ship that can burn it, that you also are able to buy it. And as dry bulk, we're pretty far removed from the end user. So if you are, I guess, if you're talking to a car carrier company or a container line, we're much closer to the consumers. The pressure there is higher, and we'll be competing for that fuel, and there won't be enough of it when we all need it, right? So I think it's we're thinking about it. We're talking a lot about it. And last night someone told me methanol for sure. This morning someone said ammonia for sure. So. I think we got to be flexible and have an open mind to all solutions. But again, it's really important we don't forget that we have ships trading today. And we need to do everything we can there to optimize those and minimize the consumption on those. And we can still do, a lot better in that space as a business, I'm sure of it.
Okay. I wanted to add on Matt's comment. We have ships trading today, but it's not ships that are trading just for our pleasure or for our personal gain. We have ships trading because the world needs all the ships to be trading. And so I think it's impossible to imagine a world that all of a sudden, from overnight, you change the mix of energy consumption on board of ships. So I think I agree with him. And then there's going to be different horses for different courses. The smaller ships probably will use one type of fuel that's not the bigger ships, because the bigger ships have more logistical hubs that will be stopping. For a handy that's tramping all over the world, I think it's going to be much more difficult to decide. I don't know, John, you can comment on this probably better.
Yeah, I totally agree with you.
And I also think we need to consider, we also need to consider the, opportunity or risk, depending on how we look at it, that we're going from one type of fuel. I think if you look 5-10 years in the future, you'll probably have 5 or 6 types of fuel, right? In the space, as Marco said, it's what's right for handysize is not the same thing that's right for Newcastlemax.
Absolutely.
And so you gotta be pragmatic and look at your business and make that.
And you have big distortion in the market. For example, there was a period, there is still probably a period where in South America there's no high sulfur fuel. So people who have a scrubber, you're not utilizing the scrubber because you can't find high sulfur fuel. So the money you've invested, you cannot recuperate it for that. So, and this is something that happened already a few years in the past. And it's not a very game-changing fuel, from high sulfur to low sulfur. Imagine when you have to discuss between ammonia, methanol, it's going to be the logistical nightmare for huge investments, just not investment on the ships, investment on the consumption chain, on the logistic of providing it. I think it's going to be very complicated.
Exactly. So it's apart from the cost or technology-wise, that whether methanol or ammonia or any other alternative fuels can be really competitive or non-polluted comparing with the conventional fuel. But I think the key point is we all agree that the supplies of these alternative fuels is also a big question mark. So I think personally, I believe that certain liner or liner-related business, for example, large Capesize or carriers, VLCC or mega container vessels, because they have the fixed routing for their trades, maybe there's kind of easy supplies of either this methanol for sure or ammonia for sure. So whatever for sure can be there for the easy supplies. But otherwise, for rather tramping a smaller size of vessels, I think it's extremely difficult to even organize the logistics of supplies of such kind of fuels. I think so far there's no any certain answer.
Yeah, and it's all those consultants and advisors that don't own any ships, right? It's so easy. Just do this, just do that. It's actually really hard, really, really, really hard. Yeah. Right. And it's not a very popular thing to say, But you know, if we didn't care about how we were doing today on the ships we have trading, then yes, it would be a problem, right? But we are making massive investments and allocating massive resources in optimizing what we do today, right? And that should not be neglected.
I think if I could make it, you know, this is the future. Predictions are always very difficult, especially when they are about the future. So just to tell you one thing, but I think that in the future you see a lot of a push towards more efficient ships. But I think replacing oil is going to be a big job. I think it's going to be a much longer, but we are compelled, or we're all obliged to improve how we burning it more efficiently. But I think there'll be a lot of more efforts on that side. Probably there'll be more efforts on the carbon capture. You know, some solutions out of the box. Saying that methanol will solve all the problems, I don't believe it. That ammonia will solve all the problems, no. I think everybody will. There's going to be a mix of things.
This is obviously a you know, complex theme to discuss, and you could probably continue for a couple of hours, but it seems like time has run out. So Marco, Mats, and John, thank you for sharing your insight with us today, and
thank you very much for having us.
Thank you.
Thank you, guys.